Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and yesterday, of course, was FOMC. We saw the Fed increase rate hikes by 75 basis points for the fourth consecutive time. This is, of course, the fastest hiking pace in 40 years. And this was one of the strangest FOMCs I've ever seen, for two reasons. First of all, they said an awful lot of hawkish things, and they also said an awful lot of dovish things. And that's not necessarily strange in itself. However, Twitter's reaction to this was bizarre to me. Very, very bizarre. I saw people were at each other's throats, people were calling each other names, people were trying to gloat and all of this sort of thing. And I just thought, since when does this level of emotion belong in trading and investing? Okay, I don't understand. I've got what I believe to be an objective presentation and an objective look over this central bank meeting today for you. I'm just going to look at the data and say this happened and this happened. I'll show you in just a moment that people that wanted to believe this was a bullish or a dovish event have cherry picked the things that sounded dovish and said, look, this is dovish, this is bullish for markets. People that were bearish and wanted to hear a hawkish narrative have just cherry picked the hawkish stuff out. But I haven't really seen anyone be objective and say there was things from both sides. Okay, so that's what I'm going to attempt to do today. I also want to point out that I saw an enormous amount of people saying the market's done. It's done. We're going to new lows, guaranteed. I mean, no, not necessarily. In fact, let me jump straight into the charts, because if you've been watching this channel, then you'll know the script that I'm about to say to you. We'll jump into Bitcoin. Okay, for weeks I've been saying we're gonna break out of here, drop down into this cycle low, and then I think we could buy the swing, right? Have I or have I not been saying that for weeks? What is happening right now? We're dropping in, quite frankly, a mellow way. This is not a dramatic fall. We're having a nice expected pullback into the cycle low, okay? So why people are losing their minds over this, I don't know. That is not to say we couldn't take these lows out soon. That's not to say this couldn't morph into a low that sweeps this low. That's not to say we couldn't go 12 or 14k. Anything can and will happen. It's a market. But looking at this without any emotion whatsoever, you know, what are you concerned about? There's nothing to be concerned about here. Let's keep going. What about the S&P? Did I not say this yellow circle would be the sweet spot to find both a retest of this downward sloping trend line and a perfect 40-day low? Maybe this is going to be 41 days. Okay, now look. I mean, this is, to my mind, this is not something to be alarmed about yet. And at the same time, whilst this is interpreted as a crash, first of all, this is not a crash, okay? Let's look at the NASDAQ. The NASDAQ is, okay, we knew we were probably going to have to pay a stop on this. That's fine. Again, coming in for that retest, not really a big concern at this point. If this was to morph into another one of these big red candles, then we could start to get concerned. But we haven't done that yet. And here, again, looks kind of concerning. But I bet you, if we connect these lines like that, we haven't even broken the trend line, okay? So let's not get all emotional about this. Let's not have any kind of stance. Let's just try to approach the markets with objectivity and most importantly, without any emotion, okay? One more thing I wanted to point out just before we get into the rest of this is the VIX, okay? The volatility index. It has not spiked. There's no fear. This is not pricing in massive swings in the market. Even though the S&P has pulled back, as expected, the VIX refuses to spike. This should tell you something, and it should tell you to be open to all of these charts that I've been showing you and all of these things that I've been saying will happen over the past week, are still very much in play. Just before we move on, I'd like to point out that I have been saying for months that I thought the Fed would pivot September, maybe October. Okay, I've been saying this for months. I did not believe that the Fed was going to continue to hike rates into a slowing economy. I thought it was bluffing. I didn't believe that they weren't going to get concerned about the amount of debt that they were accumulating from these rate hikes. And so I have been championing a pivot in September, October. We're now in November and they're continuing to hike rates. They're continuing to talk mostly hawkish, although I'll get to the dovish stuff as well in a minute. I was wrong about the pivot. This is not, again, it's not a problem, okay? In investing, in trading, you make predictions, you try your best to figure out what's going to happen, and then from there, all you can do is try. Now, did I go broke from getting this call about the pivot wrong? No. Did I lose a load of money through getting the call about the pivot wrong? No. This is not a problem, okay? It's not a problem. I did my best. I thought they were bluffing. They're not bluffing. So the question is, now what? Well, now what do we do? Well, as I've shown you the charts already, everything's kind of behaving as expected. Does that mean we can ape in here and just start buying things? No, we need to wait for a confirmation of a swing, as I've been saying. But technically speaking, nothing has really changed in the charts. So let's get into the Fed. What did the Fed say? Well, Peter Schiff chimed in and said that 75 basis point hike may well be the last hike of the year, okay? By acknowledging the lag between rate hikes and inflation, the Fed gave itself the leeway to pause. Also, the Fed's commitment to returning inflation to 2% over time does not indicate how much time it will take. This, admittedly, sounds a bit like hopium, but we'll see. Here's just one example of people saying dovish Fed. And yes, this statement was dovish. The committee will take into account cumulative tightening of monetary policy, the lags which monetary policy affects economic activity and inflation, and economic and finance developments. So you could interpret that as dovish, but to say this meeting was dovish is disingenuous, right? Let's keep going. They also said it's very premature to think or talk about pausing our rate hikes. Okay, this would indicate there's no pivot whatsoever. One of the most concerning statements to me was Powell said that the terminal rate could be higher than previously expected. That suggests that they could well have been holding out on us, trying not to crash markets in the short to medium term, trying to reduce the damage, perform damage control, but ultimately had this idea that they were going to continue to hike rates way past 5.25%. So this was the most concerning statement to me. And you can see that people that wanted, like I said right at the beginning of this video, people that wanted to cherry pick data to fit their narrative have done so. So here is somebody that wanted to be bullish. They said, look, we've raised interest rates to a level we think will bring down rates over time. Rate increases will be appropriate. We may move to higher levels than previously thought, but the level is uncertain. This is neutral or bullish for Bitcoin, yeah, if you cherry pick the data, okay? But what if you wanted to cherry pick it the other direction? Let's recap the Fed. 75 basis point hike, very premature to be talking about a pause. Terminal rate, more important than hiking pace. We're more concerned about under tightening than over tightening. So if you wanted to cherry pick the data to fit your narrative, you could do so on either side, as we've seen. Lightening the mood a bit here, it's important to point out that, objectively speaking, trillions of dollars are sloshing around the words of a single man, okay, Jerome Powell. The fiat system is a joke. I much prefer my monetary policy hard-coded transparently 100 years out into the future. Of course, this is a reference with Bitcoin. And also keep in mind that if an alien species saw how we set the most important price in our economy, they'd blow this whole place up. The way we do things makes no sense whatsoever. But again, it's important not to be emotionally invested. It doesn't matter, okay? None of this means anything, okay? All that matters is you manage your risk, you have your expectations on the charts, and you perform your trades and investments based on data, based on technicals, based on anything but emotion. And certainly hopping on Twitter to attack people, to name call, to be angry. No one ever made money doing that. No one ever made money logging onto Twitter to attack someone and call them stupid or whatever and say, ha ha, told you so, no pivot. No, you're not going to make it, okay? You need to this doesn't matter. It's just money, okay? None of this means anything. Let's keep going. So ultimately, this is how I summarize it. Well, there's definitely no pivot. I was wrong about September and October being the pivot. That's not coming. We're now in November. There's still no signs of it. Doesn't mean they couldn't pivot next month. No, of course not. They could certainly pivot. They can do it anytime they want. They could do it tomorrow, okay? But it just doesn't look like we're getting a pivot at this moment in time. However, this does set us up nicely for a drop into the cycle lows that I have been telling you would arrive, that I've been telling you would come for weeks now. So all that matters to me is how price behaves out of those cycle lows. We'll jump into the charts and I'll show you what I mean. Let's just do this right now so we're clear. If we get a hot knife through butter, if this just bleeds out and it starts to morph into one of these looks and we take out these lows, then, you know, all bets are off. We're going much lower. This is a terrible look. This is why it's good to be a trader, so that you're in cash most of the time. You know, you don't have many positions on. You're not fully invested. And that is a problem in and of itself, but that has not happened yet. If, however, we do what I think we're going to do, which is form a swing low over the next couple of days, okay? If we're going to maybe pull down here or start to recover and we can get a confirmation of a swing low pattern which looks like this or like this, if we can get a big bullish engulfing candle show up, something like this one here, then I think we can long from that out of the cycle low with confidence. As I've been saying with Bitcoin, you know, we're going to roll over, we're going to drop into this cycle low. I am looking for swings. Again, something like this, something like any one of these. We get one of these show up and a nice big green candle, I will hop in long here and there's no problem. But then the question becomes, how do we behave out of these cycle lows? Because if we drop down in here and get a swing, and then we start working our way up, okay, and when we drop down into the next 60-day cycle low, we form above this high, then I would say the bull market is on, nothing has changed, the markets don't care about what the Fed says anymore. But if, however, we were to form this cycle low, come up for a shorter while, and then roll over and take out the low wherever this low forms, okay, so if we were to take this low out, like we have done just here, and continue down, that would be incredibly bearish. That would turn me bearish. And the same is true of the stock market. So if we hop over to the stock market, we get something like this and then proceed onwards and form a higher low and then go again from the next cycle low. No problem with that from me, and I think that's fine. However, if we were to bounce up here, maybe chop around and then roll over and take out the low wherever this low forms, take out the cycle low that is due any day now, any moment. If we take that level out, this becomes a failed cycle, and then I flip bearish. But until such time, then I think all we can do is play the cycles and see what the market can give. Nobody thinks this idea is possible at the moment, but it's possible until it's not possible, okay? So there's nothing to say that we couldn't, of course, form a swing low here and then start pressing up. There's nothing to say this couldn't happen. Only does this become invalidated if, like I say, we form a swing, we chop around and roll over and take out that low. Then this is completely off the table. This is completely out of the cards. Hopping over to these, look at this. This is Coinbase. What did I say would happen? We'll pull down into a cycle low and go. That certainly seems to be in play. The same is true of MicroStrategy. Look, hop in here, didn't jump in, didn't get too early. We thought it would pull down into a perfect cycle low. This is exactly as expected. Let's take a look at Marathon. Pulls right down, look, happens to touch this cycle low. A swing here is buyable, in my opinion. I'm certainly going to be buying. And here's Riot, pull down into that cycle low. Makes perfect sense to me. Still holding a gold short. Happy days, okay? So that's enough charts. If you're watching the channel, you'll know for a while exactly where I stand. Like I said, we do need to find these swing lows. We do need to long these swing lows. And then importantly, and most importantly, we need to see if they fail. If they fail, then we get bearish. But until they fail, the bull case is completely intact, okay? And this is the advantage of having no emotion. I don't care. I don't care if we go up or down, left, right, or in circles. All I want to know is, do we form a swing, and does that swing fail, okay? So it does set us up nicely for this drop, but there is definitely no pivot. Got some nice data here. Look, the red boxes indicate FOMC days in 2022. Each event has seen a large intraday move of 2 to 4% on the S&P, and so far none of them have marked a larger trend reversal. The swing direction is not always aligned with the rate decision or the market expectations. Be cautious. And this is exactly right. When you check the data, when you look at the data, there's no reason to be making decisions yet. The market has not decided which way it wants to go. We don't know for sure if we're going up or down. Many people seem very sure, but how can you be sure? Look here, sideways in, sideways out. Look here, up in, continued up, leading in, pump and a reverse, down into it, up and then down. So that would be a trend continuation, just like this one was a trend continuation from the upside. This one below it is a trend continuation up, and this one is a trend continuation down. Okay, so there's no point getting emotionally invested and picking a side yet. You just have to let the data tell you what's going to happen. No, and the data says we don't know. We don't know until we find these cycle lows and until we can get out of there and find out whether they fail or not. One thing I do know though is Bitcoin has sent $14 trillion this year. $14 trillion. That is massive. This number will only increase as well because there's still a couple of months left of this year. Strike CEO Jack Mallers has said we could enable Bitcoin Lightning payments for Twitter Blue subscriptions in days. I do not like the idea of having to pay for a Twitter Blue or for a Twitter check mark, but I do like the idea of having Lightning payments integrated in Twitter. I like the idea of having Lightning payments integrated anywhere and everywhere. Meanwhile, the Union Bank of the Philippines, one of the largest universal banks in the Philippines, has launched a pilot program for Bitcoin and Ether custody and trading services for select retail customers. So here we go, continued adoption on a global scale. The European Union is targeting crypto influencers with new clauses on shilling. I really am happy to see this. As you know, I do not shill altcoins. I do not believe in shilling altcoins. I will never shill you altcoins. Unfortunately, many channels do. So hopefully we can get beyond this. Hopefully we can get to the point where certain people in certain privileged situations cannot shill altcoins and then use their subscribers and their viewers as exit liquidity. Let's keep going. Look, the PUL multiple has left the green zone. The last time this happened, it was a game changer for Bitcoin in the coming months. And now is a really good time to point out that Whilst I've been saying the cycles are behaving exactly how they are, remember every single one of these Bitcoin bottom indicators has flashed over the past 2 months. If we were to drop down and take out the low set in June, then you're asking all of these bottom indicators to break. Now, I'm not saying they couldn't break. They could. If they break, though, don't be championing the idea that they're going to break and then recover. We're going to break every single one of these bottom indicators that flashed by. They're going to break, and then we're just going to shoot back up and press on to new highs. That's not how it works. These bottom indicators either have to have flashed by at the bottom, or we're going to enter a true secular bear market that spans multiple years for Bitcoin. So if you're championing the idea of one more dip down, I would just caution against that. Everything is pointing to the fact the lows were in June, and everything is pointing to the fact that we're going to come out of this cycle low, which, by the way, we are in the timing zone for, and I think we'll see over the next couple of days. And everything is pointing to the fact that we're going to come out of that cycle low swinging and start a big uptrend. So that remains to be seen. Let's keep going. Bitcoin is growing faster than every financial company and bank in history. Okay, every single one. For most of these legacy financial services, they took an average of 96 years. Bitcoin has done it in 12 years. Okay, Bitcoin has done it in 12 years, and Bitcoin is going to continue to smoke every single one of these legacy financial services and banks and payment mechanisms. The Bybit exchange has been hacked for $28 million, and they've halted withdrawals. So just a friendly reminder, take your Bitcoin off exchanges. Don't leave it there. Don't leave it there. Get yourself a cold wallet. There's a link in the description for both a Ledger and a Trezor, so you can go direct to the website and get one of those. Make sure you own your keys, okay? Make sure you own your crypto, because what is the point in holding the ultimate bearer asset if you do not yourself bear that asset? Central banks should be buying Bitcoin alongside gold. I have shown a few weeks ago on the channel that the Bank for International Settlement, the central bank boss, had approved increasing the amount of Bitcoin that central banks are allowed to hold on their balance sheet from 1 to 5%. This is roughly equivalent to $9 trillion, okay, which would be a 20x approximately on the Bitcoin price. This money is going to flow in along with the Saudi money. We know it's coming. Do not miss the biggest bull run in Bitcoin's history. Judges are currently investigating whether or not Celsius has operated as a Ponzi scheme. It certainly seems that way. A lot of people got burned. There seems to be a lot of malpractice. This is just another example of not your keys, not your coins. Japan's central bank holds more than 100% of newly issued 10-year government bonds. That is all of it. Why play the game Monopoly when you can watch the Bank of Japan? This is what we're going to continue to see. This has been a trend, okay? This has been a trend in the UK, in China, in Japan, this is Korea, all over the place. There is no buyer for these bonds, okay? The central bank has to be the buyer of last resort. Japan has its printers spooled fully up. The UK has its printers spooled fully up. It's only a matter of time before we see the Fed. Certainly seems to be no pivot in sight at the moment, but believe me, there's no buyer for their bonds either. The central banks always have to be the buyer of last resort, and this is going to be a theme that continues. And for the US, this could be as early as January the 1st, 2023, according to Wells Fargo, who say the Treasury buyback program is coming the 1st of next year. The printer is coming, and you know it as well as I do. So, kind of already done the charts. Look, the dollar, let's start with the dollar. The dollar has broken out, but we could definitely draw this trend line stricter using the wick, okay? So is this where we get rejected? Again, if we think about what I've been saying over the past weeks, I said that it only makes sense we get a reaction off of this, didn't I? Then I said we'd probably waddle up here, and then if we're going to break down, we would have a chance of breaking down. That's still in play. That's in play until it isn't. So that's the dollar. It's too early to draw any conclusions right now. US 10-year. Again, I've been moving this line down and saying, is this what we're going to see? Now, I have to admit, probably this is unlikely since we know they're going to continue to hike rates, or at least that's what we've been told. I think this is most likely to start pricing in higher rates, up towards 4.5%. Bitcoin, looking for swings. Same is true of Ethereum, as you already know. XRP, still doing a whole lot of nothing. MATIC continues to lead. Look at MATIC go. Okay, so this is great. Let it lead if it wants to lead, and it certainly seems to want to lead at the moment. Zcash, pulled down nicely, looking for a swing. I think we can buy this too. Gold, as I've already said, you know the deal. Trendline break, short, and continue to push this short, looking for a new cycle. It's quite possible that this is a really annoying 17-day cycle here. So that means that we could well have a day 8 high in play, and then looking for 22, 24. That gives the 24th of November. So perhaps we're looking out to the 24th of November to try to find a new cycle low. So I continue to push this short. Not much more to say on that. Apple, still kind of trading up. I did say, of course, expect a bit of chop in the week until we get through FOMC, and then I think it can go. And I think the same is true of Tesla. So a bit more chop, maybe a retest of this breakout level, and then we can go if it's going to do that, of course. Already been through these, the miners and the crypto-related equities, so you know the score. We've got the cycle low. Now it's a case of waiting to find a swing for confirmation. You must wait to find the swing, because what's to say this isn't just going to bleed to zero, right? So we must look for a swing. We're not just going to try and catch a falling knife. But you know the deal. I've been saying this for ages. Wait for the swing, and then we can get long and strong in my longer term accounts. That's what I'm going to do. FTSE 100, nice back test here. If we can get a resumption off this horizontal, I might actually take this trade, because I've missed it, as you know, if you've been watching the channel. But if we can get a nice little resumption off of here, nice tight risk reward, should be targeting the top of this range if it's going to hold this level, of course. VIX, as I've said, refuses to spike. I expect this to continue down, and then we can try to line up a long from a trendline break wherever it should occur, just like we did back here. We did a really good job of capturing this move here. I think I did take profit a little early, something like this, but that's still a nice trade. So I'll be looking to see if we can get one of these trades play out again, but I do think this is going to continue to cool off in the meantime. Of course, I'm open to being wrong. If it breaks out sooner, then we'll jump in sooner, but I think this is going to continue at least down to this blue trend line here. Dow, watching the Dow closely, I did say a little bit of volatility. Remember, I also, all of this stuff I've been saying for weeks, you must be sick of hearing it. I said that we might come up here, chop around a bit, and then go, right? So is that what we're going to do? That remains to be seen. If it does, then longs can come from wherever that low forms, targeting the top of the range, if that's going to be the case, but we must wait for confirmation. The S&P, look, you know the score, and the NASDAQ had to pay a stop, but we wanted exposure in case we were going to rip higher. We didn't, so we'll see what happens from here. Coming in for that retest, can it hold this area? That remains to be seen. If you found value here today, I'd appreciate it if you could drop a like on the video and subscribe if you're not already. Let me know what you thought of FOMC. I honestly, like I said, I mean, I've given you my thoughts and opinions. There's no need to be emotionally invested. There's no need to be yelling at each other. No one ever made money doing that stuff. So I hope you didn't get burnt. I hope you didn't give any market makers your stops. I hope you're ready to buy some cycle lows. And I hope you can remain objective and calm as we try to profit from these markets in what is frankly the wildest time there's ever been to be a trader. So hit that subscribe button, hit that like button if you appreciate the work. And in the meantime, all the best from me. Take care. Cheers.